In this video, I'm going to show you a simple, powerful scalping strategy that you can use on the 5-minute chart and also on the 15-minute chart. I'm going to guide you through the process step by step in this very video, so watch the video all the way to the very end. The first thing on this very strategy is that it works on any pair, okay, but only on the 15-minute and the 5-minute chart. So you choose your pair. For example, in my case, I am using the eurusd 15-minute chart, and the next thing you need to do is to bring up your indicator, that is the stochastic RSI indicator. And in this very case, we want to identify overbought and oversold condition. So in this very case, we see that the market enter into overbought condition right here. So market overbuy at this very point, and we want to take a sell position to the downside, and also market oversell, okay, so oversold at this very point. So we want to take a buy position from here all the way to the upside only when the market enter into overbought and oversold condition. The next thing we want to do is to mark the candle that the line, this very line in the stochastic RSI, cross over each other, and ensure that there is two consecutive candles. For example, in this very case, we have a crossover at this very point, that is on this very candle, this bear candle right here. Okay, this was where we have the crossover. We want to wait and see the next candle close below the previous bearish candle, which was this very candle right here. So on this very candle, we want to mark out this very point. So you mark out this very point right here. Okay, so this was a candle that closed below the previous bearish candle, and then we mark out this very high of this very candle right here, this very first candle, this bear candle. Okay, once we do this, then we are set to take a trade. Once that happens, it means that the market have capacity of moving all the way to the downside. So what you need to do is to take a sell position, okay, from here after the close of this very candle right here. Okay, a sell position right here, and then your stop loss is slightly above this very point, that is this very area right at this very point, and then you look for 1 to 1.5 and 1 to 2 risk reward ratio. So if you draw it downward, it is covered, you can get 1 to 2 or 1 to 1.5 risk reward ratio right at this very point. Discover that the market will go in your direction. Let me explain again. The first thing is you take your pair 15-minute chart and identify that this is at overbought condition in this very case, and then you mark the candle that the market cross over each other on this very indicator, which is this very candle. Then you wait for the next candle to be a bearish candle. It should close below the previous candle, which this candle right here fulfills that condition. Then from here we want to take a trade for the market to come back down, and our stop loss have to be at the high, okay, of the first bearish candle, which is this very candle right in this very case. This is how you take a sell position with this very methodology or this very strategy. So the next example is for a buy position. If you look at this very point, market enter into oversold condition right here, market oversell. That means we should take a buy position from here all the way to the upside. So the first thing we have to look at is we want to see a crossover between the orange line and the blue line right here, which this candle fulfill that very condition right at this very point. Then we want to see the next bullish candle close above the previous bullish candle, which this candle fulfill that condition as well. So once these two conditions are met, then we can take our line and draw this very point. This is the low of this very candle right here, and this is the high of this very candle at this very point. This is used for our stop loss placement. Okay, this is the high at this very point, and then we take our buy position 2, which is our long position right here, and we place the trade at the close of this very candle, okay, this second candle right here, and then our stop loss is slightly below this very point that we mark from this very zone of support, and then we look for 1 to 1.5 and 1 to 2 risk reward ratio. Discover that the market should hit our target with 1 to 1.5 risk reward ratio from this very area all the way to the upside for a buy position. Another example for a buy position is with this very setup. We look at this very market come back down and the market enter into this very point right here of oversold conditions. So we have to take a buy position to the upside. If you look at it critically, it is covered that this very crossover happened on this very candle right here. So we want to look at the next bullish candle. So we have this very bullish candle to take our trade, but we need another bullish candle for confirmation. This very bullish candle did not close above the previous bullish candle, but this very bullish candle do close above the previous bullish candle. So this is the candle we want to look at right now. So we will take our two right here and then we'll mark this from this very point, okay, to this very area, and then this very candle right here, okay, to this very point. So from here we want to take a buy position to the upside. So we'll take our long position too, and then we take the trade immediately after the close of this very candle, and then our stop loss have to be slightly below this very point right here, okay, slightly below this very point right here, and look for 1 to 1.5 and 1 to 2 risk reward ratio. Discover that this market should be in the predicted direction with this very strategy. This is a powerful strategy. You can apply this on the 15-minute and the 5-minute chart. Another example for a sell position is this very point. The market move upward and then come back down. We see the market enter into overbought condition right here, market overbuy. So we want to take a sell position from here to the downside. But first thing first, we want to see a bear candle that closed below the previous bear candle. So we have this very candle right here to be the candle that cross over this very candle crossover. So this bear candle first of all formed, and we have this very bear candle close below this very bear candle right here. So we mark this out, okay, this is where we want to take our trade, and we mark this out as well from this very point. This will be our stop loss reference point, and then we take our short position too and place it at this very point, and our stop loss is slightly above this very point, okay, and our take profit target is 1 to 1.5 and 1 to 2 risk reward ratio. Discover that the market should hit our target in this very case, okay. So market move down, go up a little bit, and then finally come back to the downside. This is an example of a sell position that you can take using this very strategy. The most important thing is that once the market cross over, you must notice two bear candle that close below the previous bear candle for a sell position, and for a buy position you must see two bullish candle that close above the previous bullish candle for a buy position. These are very important things to pay attention to in this very strategy after you identify overbought and oversold condition. The next example is for a sell position. As you can see right here, market enter into overbought condition, and then from here we want to take a sell position to the downside. So the first thing here is to identify two candles after a crossover between the orange line and the blue line at this very point. And if you look at it very well, this very candle right here is where we see this very crossover happen with this very candle, and then this very candle market come back down. So we want to draw a line from here to this very point, and then we want to draw another line from here to this very area right at this very point. And then we want to take our sell position or short position too, and then take a trade at this very area, and then our stop loss is slightly above this very point, and then our take profit of course is 1 to 1.2 risk reward ratio at this very area. So if you notice this very point, market move all the way to this very area and hit our target. So this is how you should take this very trade. If you follow this strategy strictly in this very formation, you should be in the right direction of the market. And of course, please don't risk more than 1% of your portfolio or your equity when taking this very strategy into consideration, because it is not a holy grail strategy, and you have to understand that in the process of using it you will encounter losses as well. But you must not use more than 1% of your account, and stick to the 1 to 1.5 and 1 to 2 risk reward ratio. This is a very important thing to note. If you have any question, comment below in the comment section of this very video. Consider supporting this channel by leaving a like for this video, subscribe right now if you have not, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel, the link in the description of this very video and also in the pinned comment for more forex updates. If you want to watch my other video on the channel, check this video out. It's going to help you, and check this video out as well. It's going to help you a lot. Thanks for your support.